So welcome guys to this YouTube channel. On this channel we will be talking about gold. We will be discussing about gold. This is for those who are looking for a strategy, or even those who wanna enhance how they trade, or enhance their strategy and refine it. So I only trade gold, and don't think I need another pair. So all my time I've focused it on looking at gold, like looking for the patterns that gold forms, for the secret that gold forms, how it moves, what pushes it, and so on. So I don't do fundamentals, I do purely technical analysis, and that is what I will be skimming with you through, yeah, so that we can see how we will deal with it. So my strategy, for those maybe who don't have a strategy, my strategy is called POI to POI delivery. Oh, sorry. My POI delivery. Sorry. Delivery. So what does it mean? So this means that for me, I always look at the charts like this. A daily time frame point of interest will always take a price to a daily time frame point of interest. So let's say like here, we had, this is the daily time frame. We had a daily fair value gap here. What did it do? It first pushed price to a daily fair value gap, which is here. And then price then pushed up again and swept a daily liquidity. So what do we target? We also target a daily liquidity. Okay, so that is, let's say, for the daily time frame. No, let me give you another example. So we had a daily order block here. Okay, so what did this daily order block do? It pushed price up to a daily liquidity and up to a daily order block. Okay, another example, let me delete them. We had a daily fair value gap here. What did it do? It pushed price to a daily liquidity. So this means that if you take, let's say, a trade here, a sure trade, an A+ setup, then you should target another daily point of interest. So one can swing on that situation. So let's go to the 4-hour point of interest. So on the 4-hour, sorry, not point of interest, but on the 4-hour time frame, I've seen that a 4-hour point of interest pushes price to a 4-hour point of interest. So let me write for you. POI, POI. Okay. So let's see an example. This 4-hour order block here pushed price where? To a 4-hour liquidity. I hope you're with me. Yeah, let's see another. This is a 4-hour liquidity that was here. Yeah, those are stop losses. There are people who had put their stop losses there. Let me mark it. That those are dollars that are being swept there. So once this was swept, this 4-hour liquidity, where did price go? It went back to a 4-hour order block that is there. Okay. Also, once this also this liquidity was swept here, sorry, where did it go again? To a 4-hour or order block. Okay, let's see another example. So this was a 4-hour fair value gap. If you took a trade here, where would you have targeted? A 4-hour liquidity or a 4-hour point of interest? Maybe that would have been here, but because we didn't have a 4-hour point of interest to push price up here, then we target our liquidity. So if you had a trade here, this would be your target. That is 800 pips. Okay, let us look for another example. Yeah, we have it here. Like this pattern repeats itself again and again. So if you are trading gold, this might help you. A 4-hour fair value gap at this zone pushed price down to a 4-hour fair value gap also, and also price tapped into a 4-hour order block. Right. So another example, this 4-hour order block, where did it push price to? It pushed price to a 4-hour fair value gap. I hope you are with me. And then this 4-hour fair value gap, where did it push price to? Again, it pushed price to this 4-hour order block. I hope you are with me. And then this 4-hour order block pushed price again to a 4-hour order block here. And then this order block resisted price. And where did it push price again to? It pushed price to come and tap into another 4-hour order block. So like this is a pattern that you can trade with well. So you'll be knowing that if I'm in a 4-hour point of interest and then I get a confirmation of let's say selling or buying, then I should target another 4-hour point of interest. Okay, I hope you are with me. So that is a 4-hour point of interest to a 4-hour point of interest. Let's go to a 1-hour point of interest to 1-hour point of interest. Okay, so you can see even here, this was a 1-hour fair value gap that resisted price. Where did it push price to? It pushed price back to a 1-hour order block. Are we together? Yeah, we are together. Then this 1-hour order block, where did it push price again to? It pushed price to a 1-hour order block. Okay, then also here we have a 1-hour liquidity take. Yeah, and it pushed price to where? It pushed price again to a 1-hour order block. So if you master these patterns, if you go into your charts and look well, you will see that these patterns repeat itself again and again. So on a week, you'll have multiple trades that you are sure of, like that you knew if we were at this zone, then we should go at this zone. So you just wait for your confirmation. Then my strategy is a mechanical one, and I will show you. So I use a certain checklist to see if like I should be able to enter into a trade, or my trade is an A+ setup, or it is a low probability setup, or it is a medium probability setup. So let me open that image for you, and then I'll paste it for you here, and then we'll go through it together. So on this YouTube channel, I will be posting like daily backtesting of this strategy, so that you can know if this strategy is working or it is not working. Maybe you want you are that someone who want like each and every day to get a trade. So after we go through it again and again, you'll know that if this strategy will suit you or it will not suit you. If you are someone who swings, you can also take something from here. You can also take some knowledge from here and maybe incorporate it to your strategy, and it will also help. So a moment. This is my daily checklist. So today was just to explain my strategy, and then we'll go through, let's say, one trade or two trades and see how it goes with this strategy. So let's say we have a 4-hour expectation. Yeah, let's go to 4-hour. Yeah, let's take an example of this trade. Okay. Yeah, so price was at a 4-hour point of interest that we were projecting that it would oppose price. So if that 4-hour point of interest gets respected, then you have that in the back of your mind that you can take a trade. Then that 4-hour point of interest, what should is in your mind also. You are projecting that price will that 4-hour point of interest will deliver price to another 4-hour point of interest. So let's take this example here. This was a 4-hour order block that was well respected. So maybe we can target what? We can target a 4-hour liquidity. Okay. Yeah. Then 1-hour confirmation. So for my trades, after, let's say I mark out a 4-hour point of interest, I wait for a 1-hour confirmation. And what do I wait for? So my trades are divided into three. So there is the high probability trade, there is the medium probability, and low probability. If I get 1-hour engulfing candle that is in my direction, then that is a high probability trade. If I get 3 consecutive 1-hour candles in my direction, that is a medium probability. And then if I get 2 consecutive 1-hour candles in my direction, that is a low probability trade. So what do I mean? And then if I do not get any 1-hour confirmation, then there is no trade. So let's get into the 1-hour so that I can show you what I mean. So let's say in this trade, yeah, and remember, sorry, I hadn't told you, I only trade Asian session and New York session. So for Asian session, I trade from 20 to 00 Y time. That is for Asian 000 New York for our order block. So therefore, we now have satisfaction that our trade can now push lower because there is no other point of interest to oppose this price. So now let's go to our confirmation. Our confirmation. So we had already pushed into a 4-hour order block. But then at this time, this was Asian session, this is 20.00 to 0000. We didn't have any bearish candle that is in our direction. No 1-hour candle had formed into our direction because this engulfing candle, when did it come to form? It came to form at 0100. So therefore, at Asian session, we didn't have any trade. So where should we go? We should go to New York session at 800. Yeah. So we should start looking for a trade between this time zone. So we are still on a 4-hour order block. In this, there had been formed a 1-hour engulfing candle. Okay, and then price came and tapped into our 1-hour fair value gap. And then for our POI to POI delivery system, it says that 1-hour point of interest should take price to a 1-hour point of interest. So it came and pushed price to a 1-hour fair value gap that supported price to push lower. And then what did we do again? We came and broke structure here. Yeah. And then after breaking structure, we left a 1-hour fair value gap, okay, and a 1-hour order block here. And then we still had an engulfing candle at this zone. So it is just confirming our sales. Okay. So therefore, we now have confidence that we can now go into the lower time frame for our confirmation and our entry to enter the sales. Now let us go back to our chart. So at that zone, what do we have? We have a high probability setup because we had 1-hour engulfing candle. Okay, so let us first go to the 15-minute entry. Let us skip this. So 15-minute entry execution. So price should have formed at least a 15-minute order block for our entry, or fair value gap, or a breaker with a good displacement to our direction. So if that happened, you should go to the 15-minute order block or fair value gap and get your entry there. If there are no those point of interest on the 15-minute time frame, then you don't have any trade. So let us go to the 15-minute time frame and see if we had a trade. So at 800, what happened? Price first came and swept liquidity, tapped into the 1-hour order block. Let me mark it. Okay. And then what did it then do? It came and broke a structure with magnitude. Okay. And then after breaking our structure with magnitude, price came and tapped into a breaker. And you can see it was reflected back. So our entry should have been there. That is 98 pips. And then where should our target price be at? Our target should have been at this zone, this liquidity zone, that is 450 pips. And our risk to reward ratio of 1:4. So okay, yeah, that would have been a good trade using our strategy. So I will be explaining to you more about that POI to POI delivery. I'll also be making videos of like the trade that you would swing, that you can swing, and also I will explain to you the 1-hour secret of 1-hour and 15-minute order block secret that is in gold. Okay, thank you. I would like you to share, like, and subscribe if you have enjoyed the video. Thank you.